Right, today we're talking about life insurance, things that you need to know when you consider buying these policies. And it's not going to be a usual, sales pitch that you see online. I will give you my honest opinion. Life insurance, in essence, is an insurance product that will provide a one-off payment to your family if you pass away. Just a lump sum and that's it. So it's not a rocket science, let's be honest. And with life insurance, you really got two major options. You've got your whole of life and you've got your term assurance. Whole of life, as the name suggests, is the policy that will last for the rest of your life. So it doesn't really matter if you pass away tomorrow or in 150 years time from now. It's irrelevant when you pass away. The payment will be there for your family, obviously, as long as you keep paying. And because of that almost guaranteed aspect that at some point in the future the insurance company will have to pay a huge amount of money, these policies tend to cost ridiculous amount of money. And reality is that there is only two major scenarios when these policies is worth considering. Scenario number one is to cover the funeral. I mean, funeral costs nowadays cost quite a bit, depending on the area where you live and etc. But from what I've heard from the people, it's between £4,000 to £10,000. So as and when you pass away, your family will have enough stress at the time. So at least there will be a lump sum for them to cover these costs and don't need to open the credit cards or do whatever. So, covering the funeral cost, yes, that's one of the major reasons to consider whole of life. Second major reason to consider whole of life is basically if your family is going to be faced with inheritance tax liability. It's not going to be affecting many, it's only a tiny minority of the people in the UK to whom that will be applicable. But in essence, for somebody who's got quite a lot of assets, the family will have to pay 40% tax before they will be able to do something with it. So, if your uncle left you a £10 million mansion, before you will be able to sell it, most likely you will have to pay £4 million to the government. So, and because it's irrelevant if you pass away tomorrow or whenever, the tax will be there. That's really the reason why it's worth considering a whole of life. But like I've said, be prepared, it's going to be quite expensive. The second option is term assurance, or in other words, it's the policy that will have an end date sooner or later. So let's say I can buy a policy up until my 65th birthday. And with the term assurance, in essence, it will mean that if I will pass away between now and the 65th birthday, then yes, my family will get a payout. But if I've survived past 65th birthday, I'm going to get an email from an insurance company to say, hey ho Kirill, thank you for being a loyal customer of ours for so many years. As you're still alive, we don't owe you anything, so love you, see you, bye-bye. And I know it might sound a little bit unfair, but in all fairness, the reason why I, for example, have life insurance, it's like having a check on your table. If something bad happens with me, the family can take that check, go into the bank, cash it out, and they have a lump sum. That's really what you're paying for. It's not like a savings account, if that makes sense. So yeah, term assurance will have an end date. With the term assurance policies, there are three different options. You've got your level, you've got your decreasing, and you've got your indexation. Level, it's fairly simple. Whatever the amount of money you decided to cover yourself for, which is called sum assurance, yeah? So let's say 100 grand. That 100 grand will remain the same throughout the length of your policy. So if I took a cover for 100 grand up until my 65th birthday, it doesn't really matter if I pass away tomorrow on my 64th birthday, the payment will be there for my family and it's going to be 100 grand. That simple. Decreasing is when the sum assurance, that 100 grand, will go down, and by my 65th birthday, that 100 grand will get to a zero. And really, the only scenario where it's worth considering decreasing is if you've got mortgage and you want to take life insurance purely to cover the mortgage, nothing else. Then yes, and by the way, if you've got an interest-only mortgage, yeah, don't even think about decreasing, go level, because the amount of money that you owe to the bank is remaining the same. The decrease in cover really have got that little downside. And the downside is that you're still paying the same amount of money every single month, but the cover shrinks. So if I'm buying life insurance on a level basis for 100 grand, 100 grand stays the same and I'm paying my whatever, £20 a month. If I've bought a decreasing cover for 100 grand, it's going to cost me £15 a month. But the harsh reality is that in 15 years time, it's not going to be 100 grand in there, it's going to be 50 grand, but I'm still paying my £15 a month. So it's one of these. Right, now we move into indexation policies. Indexation policy will mean that your sum assurance and your monthly premium will be reviewed every single year depending on the level of inflation. Because, let's be honest, 100 grand today is 100 grand. Tomorrow or in 20 years' time, God knows what we'll be able to afford for that money. So that's why insurance companies come up with that product. And in essence, if you've got an indexation cover, once a year, the insurer is going to send you an email to say, look, you've got 100 up until your 65th birthday. The inflation this year is 10%, so we're suggesting to increase the cover from 100 to 110, and your monthly premium will go up from whatever, 25 to 27 pounds a month. Would you like to do that or not? And you've got an option to say no and yes. And on a long run basis, which obviously these policies are, I would perhaps suggest to consider indexation cover rather than level, so that you will at least have an ability to say yes or no to the increases. And that's pretty much it. So, just to conclude one more time, whole of life, payout will be there, cost ridiculous amount of money. Really, it's worth only considering to cover the mortgage and IHT. Decreasing, only worth considering when you've got a repayment mortgage. Level is the most common. Indexation, growing in popularity, and I think that is the cover to go to. And that's it really. It's not rocket science like I've said. So just think wisely when you're deciding what type of cover to choose, because each one of them is designed to cover specific things. Yeah, if you like it, subscribe to my channel, as I will cover all sorts of weird and wonderful insurance products out there, and will share with you my honest opinion when it's worth having these policies.